Welcome. Today we're focusing on the new trade agreement announced between the U.S. and China, looking at the tariff reductions and the immediate market reaction.
That's right. We'll explore the specifics of the deal, why it's happening now, how markets reacted, and what experts are saying about, how significant this really is.
We'll also touch on the trade deficit, supply chains, that sort of thing. If you find this useful, please do like and subscribe.
Okay, so the headline news is this agreement reached in Geneva, basically a 90-day pause on reciprocal tariffs.
Effective May 14th, 2025. And the details on the U.S. side.
U.S. tariffs on Chinese imports see a big drop. They were at 145%, now down to 30% total.
30%. And how does that break down?
It's a 10% baseline tariff plus another 20% that's linked to fentanyl concerns.
Okay, important distinction. But any U.S. duties from before, say early April 2025, those are still in place?
Exactly. Those pre-existing ones remain. And China's side, they've also made significant cuts.
What are their numbers?
They're dropping tariffs on U.S. goods from 125% way down to 10%. Plus, they're removing their retaliatory tariffs and suspending countermeasures that came in since April 4th, 2025.
Wow, okay. So pretty substantial shifts on both sides. And the markets, how do they take this news?
Dow futures surged over 1,000 points early Monday.
1,000 points. And S&P 500, Nasdaq.
S&P futures jumped around 3%, and Nasdaq futures were up nearly 4%. Big green arrows pretty much everywhere.
And this wasn't just a U.S. phenomenon, right?
No, not at all. Global markets followed suit. Stocks in Europe, Hong Kong, they also saw pretty significant gains.
Let's drill down into some specific sectors. Tech seemed to have a very strong reaction.
Absolutely. You saw the giants rallying hard. Tesla and Amazon both up around 8% in pre-market. Apple and Meta platforms, they were up about 6%.
And chip makers, that's always a key sector in U.S.-China trade discussions.
Very strong gains there, too. NVIDIA, Broadcom, Marvell, Micron, ON Semi, Microchip. I mean, the whole sector flew. The main semiconductor ETF, SMH, was up 6%.
Right. What about other areas? Logistics, perhaps?
Yes, definitely saw movement there. UPS was up 5%. FedEx, about 6%. Makes sense, right? Tariffs hit goods movement.
And e-commerce, particularly Chinese names.
Alibaba added 6%. We also saw positive moves from Shopify and, interestingly, Best Buy.
Okay. And you mentioned goods movement, shipping companies.
Huge jumps there. Maersk and Hapag-Lloyd saw double-digit percentage increases.
Double digits. Why such a strong reaction specifically for them?
Well, these tariffs really choked the flow of goods across the Pacific. So the thinking is, with tariffs easing, bookings will rebound. It's direct potential upside for them.
Makes sense. Okay, so that's equities. What about other markets? Safe havens, for instance.
Predictably, they moved the other way. Gold futures dropped about 3.5%, down to around $3,230 an ounce. Less need for safety, perhaps.
And oil.
Oil prices actually gained. West Texas intermediate futures were up nearly 4%, maybe reflecting optimism about global economic activity.
Interesting. And treasuries. Bond yields.
Yields rose. The 10-year Treasury note yield climbed to 4.46%. That suggests the market might be dialing back expectations for near-term Fed rate cuts, maybe seeing less need for stimulus if trade friction eases.
Right. And the U.S. dollar.
The dollar strengthened. The U.S. dollar index hit its highest level in about a month.
Okay, quite a widespread reaction across asset classes.
Yeah.
Now, who are the key players in striking this deal?
On the U.S. side, you had Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer leading the talks. For China, it was Vice Premier He Lifeng.
And what are officials saying publicly?
Secretary Bessent called the progress substantial. The White House press secretary, Caroline Leavitt, described it as an extraordinary first step.
So quite positive framing from the U.S. side. The White House even called it a historic trade win.
Yes, that was the language used. And importantly, they've agreed to set up a mechanism for more talks, ongoing discussions on trade and economic issues.
So this isn't necessarily a one-off. Bessent expects more meetings soon.
That seems to be the indication, yes. Aiming for something perhaps more durable down the line.
Let's put this into the broader context. The U.S. trade deficit with China remains quite large, doesn't it?
It does. It was $295.4 billion in 2024. A huge number.
And the U.S. justification for keeping that 10% baseline tariff, even with this deal.
The official line is that it's meant to encourage domestic production, strengthen supply chains here at home.
And the U.S. is still pursuing that strategy of decoupling in certain strategic industries.
Yes, that policy seems to remain in place. This deal looks more like a significant de-escalation of the broader trade war, which, let's be honest, caused a lot of uncertainty and hit economic activity.
So a de-escalation. And some analysts are even suggesting this could pave the way for new highs in the market.
There is some optimism out there, yes. Removing that tariff overhang is seen as a positive catalyst.
Okay, but despite all this positive reaction and the official statements, there are cautious voices too, right?
Absolutely. It's not all clear sailing. For one thing, that new 30% U.S. tariff rate, while it's down from 145%, it's still pretty high compared to tariffs on goods from other countries.
That's a fair point. And the 90-day duration?
That's a major point of concern. Experts, and certainly Chinese companies, are worried this pause might just be temporary. A 90-day window isn't very long in business planning.
So uncertainty remains. Are Chinese exporters already adjusting?
They are. We've seen reports that they're already diversifying their global strategies precisely because of this kind of tariff volatility over the past few years. They can't rely solely on the U.S. market under these conditions.
What about international bodies, like businesses operating in China?
The European Chamber of Commerce in China, for instance, said they're encouraged by the move, but they also highlighted that uncertainty remains high because the pause is short and, well, the history here has been unpredictable. They're hoping for continued dialogue.
So guarded optimism, perhaps.
Mhm.
And analysts are pointing out the core issues haven't vanished.
Exactly. The fundamental reasons for the trade imbalance, the structural issues, they're still there. This agreement doesn't resolve those overnight.
There was also some talk, wasn't there, potentially linking this to the TikTok situation?
Yes, there's been some speculation about whether this is connected to those earlier discussions, particularly suggestions from President Trump about a potential sale. It's unclear if there's a direct link, though.
Speaking of President Trump, he reacted on social media, too.
He did. A post simply saying, "No inflation, love DJT." This seems to be referencing those earlier predictions that his administration's tariffs could significantly increase inflation.
Right. So looking ahead, these next 90 days seem pretty crucial.
Extremely. It's really the window to see if this temporary truce can evolve into something more permanent, more stable agreement between the U.S. and China.
Okay, so to wrap up, we've seen a significant agreement reducing U.S.-China tariffs, leading to a strong, positive, and widespread immediate reaction in financial markets.
That's right. A major de-escalation, at least for now. But it's important to temper that with the cautious perspectives, the temporary nature of the pause, the fact that the 30% U.S. rate is still high, and the underlying big picture issues remain unresolved.
So it's this interesting dynamic, immediate market euphoria versus these lingering economic and strategic questions between the two countries. That's certainly the landscape we'll be watching closely over the coming months. Thank you for joining us for this analysis.
Thank you. And we do encourage you to like and subscribe for more examinations of key global developments.